Hey, what's up, guys? This is Chris, and that's Elgin, and you've tuned into EC Money with Chris and Elgin.
Alright guys, today's show is going to be about two major things. A, we're going to go ahead and talk about what's going on in the week, which we have some big news regarding what FHFA did. But more importantly, we're going to talk about baby step number 2, which is going to be really about saving up for an emergency fund and all the giant pitfalls if you don't have that going for you.
Wait, I've heard of FHA. What is FHFA?
FHFA?
Yeah.
It's going to go ahead and be a government entity that oversees Freddie Mac and Fannie Mae.
Also, the boss of the bosses.
The boss of the bosses,
Okay.
because they're still in timeout from 2008.
Speaking of boss of the bosses, this is what I was alluding to
Oh, come
last
on.
show. See this? This.
So you see, what happened there is that someone made a really great picture of me. And, I mean,
Tell me that doesn't look like the boss of the bosses.
one and only.
Look like you're about to go invade France.
Alright, so let's get on with this week's news.
All right.
This guy can keep a straight face.
All right.
Alright, so as I was saying, FHFA,
Mm-hmm.
FHFA, right?
FHFA.
They went ahead and announced this week that they're going to go ahead and extend forbearance for 18 months.
Oh, wow.
Yeah, but what does that mean?
I don't know.
At the end of the day, that's why I had to read it.
You're the mortgage guy.
I'm the mortgage guy.
What is forbearance? Because I know forbearance is when you don't have to pay your mortgage, right?
Technically.
Okay. So I know that it started because of the pandemic and not everyone can afford to pay, et cetera, et cetera. So it's like pushing the payments. Like, all right, so in layman's terms, what is forbearance and what would be the benefit of someone taking forbearance? Or should people even take advantage of forbearance?
So many questions here.
It is. It's a lot.
It's a lot of questions, but let's dive into it and let's, as I like to say, what was that? The KISS method?
Keep it simple, stupid.
Keep it simple. So simply what forbearance is for that month that they've given you forbearance, you don't make a payment.
Right.
That has nothing to do with it guarantees you that the payments got pushed back to the end.
Right.
Or any of that. Actually, the way it reads is you're actually, so as soon as you're out of forbearance, you're supposed to be able to make all your payments at once.
Yikes. So if you go a whole year without making any payments, once the forbearance period is over, you got to pay all that back.
Supposedly.
Okay.
And here's what I mean by that. That is what forbearance is.
Right.
Now, because of what happened in 2008, the banks are now required,
Right.
especially if it's a government-backed loan,
Right.
meaning that if it's an FHA loan,
Right.
VA, USDA, conventional, any of those loans, the bank or the lender has to find a way to help the client stay in the house.
Okay.
AKA, if you can't afford that because the purpose of forbearance was to help you out,
Right. Right.
then what that means is that they're going to go ahead and find a way to do that. Whether it's maybe they go ahead and say, all right, well, can you make your payment plus half of it
Right.
for the next year to get caught up, which, again, most people can't do.
Right.
And if they can't figure any of that out, then they kick it to the end.
See,
But they're really going to negotiate.
that's what I guess that's the part that confuses me because most people don't have money to miss a mortgage payment in the first place.
Agreed.
So having someone pay back, let's say, a whole year's worth of mortgage payments, I don't think they seriously feel that someone can do that if they needed the help in the first place.
Here's the problem with it. When it rolled out, anyone could apply without any proof that you needed it.
Gotcha.
You didn't have proof that you were laid off. You didn't need anything.
Right.
And that's really where I say, should you really take advantage of it?
Right.
Only if you actually need it.
Right.
Only if you truly need it. Because here's the thing. A lot of people, because they took advantage of it,
Right.
were not able to take advantage of refinancing. Were not able to take advantage of even maybe selling their home and buying another home to take advantage of property values being up so high that they could take out their equity. Like, it's really delayed them.
So it's a trap.
It's not a trap. The problem is it's an education, which is what the point of the channel is
Right.
because we aren't educated when these programs roll out. We think, awesome. All we heard was, I can go 18 months without a payment.
Skip a payment.
Skip a
Right,
payment
yeah.
plan.
Yeah.
Like, how's that any good, man? That's not. So that's all we heard. What we didn't hear is this is meant for people that need help.
Right.
You know what it's like? It's like someone that makes $100,000 a year,
Right.
wanting to qualify for down payment assistance
How often do you see that happen? Quite a bit, I'm sure.
all the time. And I'm not saying they shouldn't, but you're asking for basically government handout that, again, has its negative sides. By no means, there's some great things about it. Please don't think that
No. You're sugarcoating it because here's what
there's
I've
some
heard.
great things about all of it, but it's great for the people that truly need it.
All right, so here's what I've heard, and you can tell me where I'm wrong. I've heard that when somebody goes for down payment assistance, the interest rate can be higher,
It is.
and the terms are not as favorable as if you were to just come with the money in the first place.
Absolutely, and the key word there, I tell people it's assistance.
Right.
It ain't down payment grant.
Right.
It ain't down payment free money.
So you have to also live in the house for like 10 years or something like that.
Every program, I mean, there's so many down payment assistance programs.
Right.
But every single one has a catch.
So as long as you can afford to have the down payment money, don't take down payment assistance. If you need it, great. But if you don't.
No, 9 out of 10 times. And again, what we do here, it's we're going to go ahead and actually consult them and see mathematically does it make sense.
Right.
Most people, again, if you qualify for it, you're
Right.
going to get it because you need it.
Right.
Like, that's simple enough.
Right.
The issue with forbearance, it wasn't like any other government program where you had to prove you qualify. I mean, to qualify for Social Security, you have to provide evidence.
Right.
To provide qualify for welfare, you got to provide evidence. Because this all happened last minute, the government's like, how do we help millions of people immediately?
Right. And cut the red tape.
And that's it.
Yeah, it makes sense.
I mean, they did what they had to. I'm not saying they were wrong, but I think the part is, again, we just heard the good news and took advantage of it.
Right. Which most people did.
Yeah, man. But let's get into this week's topic.
What's the topic?
Emergency fund savings. Baby step.
Number 2.
Baby step number 2, man.
Okay.
We talked about last week. We talked about really self-evaluation.
Right.
Budgeting. This week, now that you've got that figured out,
Right.
before you start, as I say, attacking paying stuff off or focusing on even buying a home, if you don't have at least $1,000 in savings,
Right. Build an emergency fund.
you need a baby emergency fund. Do you know any idea, Chris, what let's say the minimum emergency is, like average emergency is?
All right. I don't know what the average emergency is, but I do know that there was a study that said that the average American is $400 away from going completely broke. So if there's a $400 emergency, most people are just wiped out completely.
Yeah, that's insane. So that's why we say $1,000.
Right.
Double that.
Right.
Right over double that. Put you in a safe zone. Here's the thing: you don't ever want to finance your emergencies.
Right. Yeah, that's true. And by putting it on a credit card or something like that.
By putting it on a credit card,
Okay.
which is where I want to talk to you about since you handle the credit and stuff. If I put $1,000 on a credit card and I make minimum payments, how long am I gonna be paying that for?
Easily 2 years.
2 years.
Easily 2 years to pay off $1,000 because most credit cards come with 20+%.
So you're
interest
telling
rate.
me longer than most of my relationships prior to being married?
That is way too personal for this channel.
You never said we couldn't be personal on this channel.
So the point is that you don't want to finance an emergency. The average American only has a $400 cushion, if even that, before they're completely bankrupt. So medical emergencies are out of the picture, and if you put an emergency on a credit card, and let's say you spend $1,000, it will take about 2 years to pay that off if you only pay the minimum amount. So avoid that.
Avoid it big time. And here's the thing: you just said medical. Like
Right.
most people, that's where part of their collections add up.
Yes.
Which is why this is so important, because you can't afford the deductible
Right.
on your insurance policy, especially after everything that changed with Obamacare.
Right,
You know?
right.
Some of these deductibles are rather high, unfortunately. Which, yeah, it's great because more people were able to get qualified, but deductibles definitely went up overall.
Right.
So having that emergency fund is key prior to you going to the next step, which we'll talk about next week, obviously, which is then going to be attacking debt. So we'll give you a little bit preview by giving you that tip. But you got to have that emergency fund. Now, Chris, let me ask you something. I hear people call all the time and they said, I thought medicals aren't supposed to count against my credit.
All right, so I'll tell you again what it is that I've heard, and in my experience, and you tell me where I'm wrong. So, even if I've heard that some lenders will omit medical debts, but the problem is it still impacts your credit score. So if your score isn't high enough to where you'd be approved, it really doesn't make a difference. You need to get rid of those medical collections to boost your score so that you can be approved. Is that pretty?
Well, yeah, that's accurate. So correct. So the actual medical collection, especially like on an FHA loan,
Right.
we pretend like they don't exist. But at the end of the day, if the reason why your credit score is a 500 credit score or even a low 600 credit score is due to the medical, well, we're still back to the same circle.
Right, still gotta get rid of it.
You know, we still have to work on something there. But I thought medical collections couldn't go on. I thought that people were protected by HIPAA laws or something like that.
Aha! See, right there, you're giving away the secret because
I'm not giving away no secret. I'm trying to understand because I see it all the time.
right.
I mean, I personally think it's because, well, technically speaking, the hospital is not reporting the medical collection.
Okay.
They sell the collection and someone else is a collector, and so therefore it's no longer medical. Now it's just a collection, so therefore it goes on to credit.
All right, so he did this to me on purpose. Let me explain how that works. Because he's right. He's 100% correct. So if you've ever been to the hospital before, and I enjoy explaining this one because it's funny to see people's minds go whenever you explain how it works, right?
Can we make effects?
I actually can. I'm going to put that
I
in
don't
there.
see effects come out of your head on that.
I'm going to put like a hospital like right here. All of a sudden it's going to be... Watch. All right, so if you've been to the hospital before and you know that if you even get like aspirin, you have to sign off on a waiver saying that if you die because you're allergic but you didn't tell anyone, you can't hold the hospital responsible, you can't hold the doctor responsible. It's called an informed consent disclosure. Thank you. They informed you of the risk, you consented to care, and that disclosure is proof that you basically said, go ahead and do your worst. Now, Elgin is right. Once you don't pay that debt and it goes to a collection agency, they only get a copy of your name, social if you gave it for some reason, address, and how much is owed. They cannot give what procedures were performed because of HIPAA. So if a collection agency calls and says, hey, well, you have this outstanding medical debt for $500, there's a way to pretty much just say, hey, well, why is it 500 and not 50,000 or 5,000? I know it sounds crazy, but the reason you ask that is because the information that's put on your credit report has to be accurate. It has to be accurate. So a $500 debt, it has to be explained. How did it come to that? What procedures were performed? But if the hospital gives that information to the collection agency, that's a $50,000 fine that the hospital is liable for. They don't want that smoke. So yeah, it's pretty simple to get rid of.
So basically it's a giant circle.
It is.
It's a giant circle that if you understand where the pitfalls are,
Right.
you can arm yourself properly, you
Right.
can take care of it, and hopefully let that your credit be higher.
Right, but see, most people will say, well, most collection agents that are smart will say, well, don't you recall going to the hospital on this particular day at this particular time? And you're like, yeah, I did, but... And
so what you're telling me, basically like cops, they set you up, and
Yes.
if you omit and I guess you're proven guilty because you simply
Right,
lied
incriminate yourself,
away,
right,
incriminated yourself,
Right.
which we don't do on this channel. We don't ever incriminate ourselves. We live in the gray, never in the black.
Right,
Definitely, sometimes in the white, but definitely in the gray.
right.
Keep it safe.
And just so any cops are out there, he has a lot of first responders programs, so contact Ace Lending Team for any of your mortgage needs.
Absolutely. That was a good one. I love the shameless plug.
Right, of course.